Successful day trading relies on a specific skill set, the ability to read a specialized map. While many newcomers feel like they are just guessing if a line will move up or down, experienced traders are looking for very specific patterns in the crowd. Think about your daily commute. You are likely familiar with the exact intersections that turn into a bumper-to-bumper crawl, and the specific stretches of road where you can finally accelerate, zooming forward onto an open highway. Stock prices follow this same rhythm. At certain price levels, the market gets stuck in a heavy grind, while at others it moves with incredible speed. Standard stock charts often hide these traffic jams. They show us volume at the bottom of the screen, which tells us when a lot of trading happened, but it fails to show us the specific price levels where the crowd is actually gathered. To see the roadblocks, we use the volume profile. Instead of vertical bars at the bottom, this tool draws horizontal bars that grow across the screen. These bars align directly with the price, showing exactly how much trading happened at every level. This creates a heat map of the market. You can see exactly where the crowd is gathered and where the road is clear before you ever place a trade. We apply this map to a 15-minute time frame, focusing on highly active markets like the Nifty 50 index or major stocks like Reliance. This ensures there is enough traffic for the patterns to be reliable. On this chart, the longest horizontal bars are called high-volume nodes. These represent the major traffic jams where massive buying and selling took place. Because so many traders are active here, these levels act like thick brick walls that stop the price from moving easily. The absolute longest bar in the profile is the point of control. This is the ultimate center of activity for the day, the spot where the most trading occurred. The shortest bars represent low-volume nodes. These are the open highways. Since very few trades happened here, there is no crowd to slow the price down, allowing for rapid movement between the brick walls. These zones work because of trader psychology. High-volume areas act as strong support or resistance because thousands of traders have a financial stake at that exact price. In low-volume areas, there is no resistance, so the price can glide through effortlessly. Identifying these specific zones transforms a chaotic chart into a legible map of roadblocks and fast lanes. Once the map is ready, you must choose the right tactic for the road conditions. You drive differently in a traffic jam than you do on an open freeway. The first tactic is the reversal. When the price approaches a high-volume traffic jam, you prepare for the price to hit that wall and bounce back. Wait for a specific pattern to form, like a shooting star candlestick, which shows the price is being rejected by the wall. If the bounce is confirmed, you place a protective stop-loss line just on the other side of that traffic jam. The second tactic is the breakout. If the price successfully pushes through a wall and enters an empty, low-volume highway, you should expect a sudden burst of speed. You look for a strong, bold candle to enter the empty space. You can then ride that fast momentum until the price reaches the very next cluster of high-volume traffic. Successful intraday trading comes from matching these two tactics, the reversal and the breakout, to the current traffic conditions shown on your profile. Even with a great map, driving requires a seatbelt. In trading, that means strictly managing your risk. Your first safety rule is to avoid entering a trade based on the volume profile alone. You verify your route by checking the other dials on your dashboard, like the RSI or MACD. Think of these as your speedometer and compass. They measure market momentum and trend strength to tell you if the move has enough energy to reach your target. The second rule is non-negotiable. Never risk more than 1 to 2% of your total account on a single trade. By keeping your risk low and using stop losses, a single wrong turn becomes a minor setback rather than a disaster. You simply stay in the game and wait for the next clear road. Using the volume profile to read market traffic allows you to navigate the market with professional precision. If you're ready to start mapping your own trades, like this video and subscribe for more strategies.